Yes, greetings, wonderful people. How are you, everyone, dear viewers of this channel, and whoever finds this content helpful for them? Welcome again to another video for our market overview, market analysis, the gold market, gold spot US dollar. As usual, we are back. Today is Tuesday, the 20th of January 2026, with our morning routine. Every single day we are having a market insight to have the understanding of the market trends, also the technical overview, the fundamental overview, and so much more. So thank you so very much for being part of this, and please always, as I said, help me to subscribe to the channel, like, and you can share this content on gold. So without further ado, let us go into the analysis of the day. And as usual, we always start from the top down analysis. This is the norm of starting the day on the market, the general scanning of the market from the top high time frame of 1 month. Now, as we have seen previously, we have noted that gold, the trend for gold this month is bullish, fully bullish, from the beginning, from the opening price of this candle to the retracement part of it, and then up where it is. The market has been tremendously bullish, moving over 3,000 points. It's crazy, 3,000 points ever since gold opened in January. As we speak now, the market has moved over 3,400 pips. That's what I can say. As we speak now, from the opening of this candle to the high price, 3,400 plus. Incredible, very incredible. So what did gold do on the monthly time frame? It took out the December candle, or the December high. It took out this liquidity. You can see that December was bullish yet, but at the close, the market retraced back down. That means sellers came and pushed the market on the high, all-time high price, and pulled it back down. So what January did was it opened here, slight retracement, and took out all this liquidity, this wiki, or this imbalance, whichever you can call it, and then formed a new high price. This is how markets move. Okay, so the bias of the month is bullish. That one has no negotiation. So let's look at the weekly time frame. Let's look at the weekly time frame. We are in week 3 of this month. Now, the new week that opened yesterday, Monday, because today is Tuesday, is still indicating a bullish trend, but with a retracement. But the candle here is a bullish candle. That's one we cannot negotiate about it. It's a bullish candle that has pumped up and under retracements. So chances are high that the market is interested in pushing back or even create a new price or move into the psychological price of 4,700. Okay, so we intend to see what happens for this week. Let me enlarge this week and you'll be able to see fully. You can see market open, retraced to 46 price, 46.47 price, and then pushed back. So this, if this week does not complete this move that was done yesterday, then the new week might come and balance this liquidity. So gold is bullish this week with a retracement. Okay, so this is the weekly assessment we can see. Okay, so if you can mark and say, okay, let me mark this as the week high. Okay, mark this as the week high, then we mark this as the week low. Okay, if you're marking some liquidities for buy side and sell side, yeah, we can say this is the week low. Okay, and the week high is here. Okay, so let's go to the daily time frame. Now the daily time frame, this is day one for this week, which was yesterday. You can see how the day opened and how the day closed and how far did the day go. The market went up to 46.90 price, okay, but closed at 46.69, 46.70. Yes, this was the market closure. Now what is gold doing today? Since we are on the daily time frame, we're seeing an opening and a move up, okay, then a retracement back, came down again to the 46 price, and then it pulled back. Now what can we say about this candle? This candle, this is an indecision candle whereby it is indicating neither the buyers nor the sellers are in control. So we are indicating an indecision. Buyers have tried to take the market up, sellers pushed down. Sellers tried to push the market down, buyers came back and pushed the market up. This is the face of the market today. You see, on a daily time frame. But you see, every time you analyze and you go to the other time frames, you see a different face of the market. So without wasting time, daily time frame, let's go to the 4-hour time frame. Now we marked our range of the day. Let me even try to reduce this, then enlarge this for better view. Yes. Now the range of the day, we marked yesterday's low, which is the week low. Okay, so this is going to help us have the trading range. Okay, so on 4-hour time frame, categorically we can say gold is ranging. Since yesterday when there was a bank holiday in the US. Okay, so to me, categorically we can say gold is ranging. On a 4-hour time frame, gold is ranging because there is no specific move. You can see how this move was yesterday. A very huge move and then a very huge rejection or pullback. retracement down, no fair value gap, but liquidity kind of zones. So if we marked the previous day high, previous day low, which is still the week low and week high, okay, so we can say this is the Asia high of yesterday, this is the Asia low of yesterday, this is the New York high of yesterday, yes, and this is the New York low, no, the Asia low of today. Okay, let's mark this for clarity. It will help us. Good. Okay, so let's mark this zone as yesterday's high, and we have today's low, which is the acting Asia low as we speak now. You see, this on 4 hour. So we look at the market at 46.80 as New York high for yesterday, and then currently we are having 46.59 as Asia low today. It might come and take out this and all, So what I usually do is I put some alerts so that I'm able to know when the market meets this zone. So what are we trading today? Okay, what are we trading today? Let's see. So for our time frame is that we have marked yesterday's low, yesterday's high, New York high, Asia low today. Let's go to the one time frame and see. Let's go to the one time frame and see. 1 hour time frame. So what is 1 hour time frame saying? Let's try to zoom a little bit. Okay, now 1 hour we had a very serious drop yesterday towards the closure of New York, and so gold has had a drop in the 10 p.m. night. When the market opened today, it had a continuation drop for New York, came and tapped into this zone. Then we are seeing a bullish candle, but it is a weekly close. It's not a bullish it's not a body candle close. So that means the bullish momentum came in, but there was a pullback. So there are two market price rejections here. The price rejected this zone, and again still a bearish candle came and rejected this zone, another rejection here. So what are the sentiments? Maybe the market might drop a little bit, come into this Asia low liquidity, sweep it, come back, and then maybe retrace and create another momentum to go up. So if your bias is bearish, you might be on point because I see the market is dropping. If your bias is bullish, then you wait for a better, lower price to be respected, and maybe we now, because we have the previous day high buy side liquidity, we have buy side liquidity here, we have buy side liquidity here that has been created, we have sell side liquidity here, We also have sell side liquidity for yesterday, even this. So sell side liquidity at 46.50s and 46.40s. These are the sell side liquidity we have. So this zone is a ranging zone. I cannot enter a trade here. It might be risky given even the time. So we have to wait, especially if you're buying gold, maybe a better price to be given, to be offered. You see, trading is like negotiating for a commodity or a deal. So if you want to buy this commodity, would you buy it at this price? Are you comfortable buying at this 46.66 price? If you're not comfortable, then you wait for a better price. So you wait for the negotiating process until the market dumps to a better lower price. If you bought at 46.66 and the market goes down, that means you'll be in a floating loss. You bought at a price that most market makers did not want to buy at. Okay, so 1 hour is still choppy. Let's go to the 15-minute time frame, then we bring to the close of our analysis. All right, so today we have our 15 minutes. Yesterday was very funny move because of the bank holiday in the US. Okay, so today is the new day. Where did the new day open? The new day opened here. Yeah, the new day opened here at 2 a.m. in the morning. So there has not been a significant move so far, but I see a fair value gap here on 15-minute time frame. I see a fair value gap here. Yes. Can it act as the temporary support? Can it act as the temporary support? You see, 15-minute always is a lower time frame for entries, but we can use it for some references, short-term references. So this 15-minute fair value gap is giving us, like you can see, the market is respecting this zone. By the way, look at this candle, this, and this, and this, even this one here. Yeah, it's acting as a base, temporary base. But you see, 15-minute is always having very faster moves, you know. So if you ask me how is the week so far, apart from this move for yesterday, the rest has been a little bit choppy. Maybe this move from here came up to this point. Some break of structure. Yeah, by the way, you can call this move here break of structure. Maybe kind of even a change of character. Maybe let's begin from here. They moved, break of structure, move, change of character. This is a range, you know. Yeah, so let me zoom in a little bit. Okay, yeah, maybe this drop also that happened yesterday, New York, which dropped and came and took out this liquidity and also took out this land and balanced that London low. Yeah, so what is the trend? The trend is kind of like bullish with a break of structure here, bullish break of structure, maybe gold might indicate a push up and then continuation. Current price is 70, playing around there. Let's see how things go. Yes, fundamentally today is Tuesday. We don't have much news in the US dollar, so that means the gold move will be naturally influenced by the trading. The banks are open, there's no public holiday, there's no bank holiday, so the move today will be natural. There will be no volatility due to news. Okay, so thank you so much guys for the support of this channel. I appreciate you so much, and I hope you find this content helpful for you to increase your capacity in understanding the gold markets. Thank you so very much, and wish to see you in another video. God bless you. Peace.